if I asked this in a room of tech founders and venture capitalists, every hand would go up. But we're not, thankfully, in a room of all tech founders and venture capitalists. So how many folks here are familiar with the business Stripe? Looks like maybe 2/3. OK. So I think a fair amount, but I think it speaks to just the diversity of this audience. So our next speaker, we're going to have a fireside chat, is John Collison, the founder of Stripe. Stripe's really one of the most exciting technology companies of the last decade. They process $1 trillion a year. They have pretty much all of your credit cards on file, so be nice. And John is also an investor in Convective and an investor in Rain and cares a lot about wildfire. So we're going to talk to him a little bit about that. He's also a pilot and a flight instructor, certified flight instructor. I know we have some air attack officers in the audience. And so he's got, we're going to talk about a bunch of different topics, not just wildfire, but touch on a bunch of different things. So please help me welcome John Collison. Sweet, nice to see you again. All right, so John, I heard you came here today in an electric boat. Tell us about that.
OK, so there's a company called Navier. Anyone here heard of Navier, the boat company? Yeah. They are based just a mile down the road from here, so you go check them out afterwards if you want. And they are doing an electric hydrofoil. Electric propulsion for the boat, and part of how they make the math work with the weight and drag and everything like that. You can look it up, Navier boats, and part of how they make the equation work is then it foils and comes out of the water. The product is incredible, and so we're actually working with them on, I guess this is not fully signed and everything, but we're meant to get it signed this week so I can, between friends, we're doing a pilot with them at Stripe because our office is just across the bay in Oyster Point, just by the airport. And we have a bunch of employees in North Bay and East Bay and everything like that who want to get to work conveniently, and traffic is terrible. And so anyway, they gave me a ride over here. Though I think maybe the commonality here, the theme is that we should think about the environment that we want to have for ourselves, and then the delta with where we are, and so we shouldn't just be accepting of traffic across the Bay Bridge is a complete disaster. I guess this is the pinnacle of humanity. This is all we can do is be sitting in traffic on the Bay Bridge. It's like it turns out technology allows something better these days. So I think that's apropos for this room.
Absolutely. So we got to know each other because we both started payments companies in 2008, 2009, and I remember
vicious competitors.
Vicious competitors, but friendly competitors.
Right.
I remember as you probably remember too, kind of the ever-present wisdom at the time was that no tech company could disrupt the financial industry, and it was just too bureaucratic. It was too regulated. The banks were an oligopoly. Visa and MasterCard, blah blah blah. So can you just talk a little bit about sort of cutting against the grain and sort of overcoming some of that skepticism as a founder?
Yeah, I think the thing for you guys to all know working in Fire is spaces only become a good idea to start companies in post hoc after a bunch of successful companies have been built. And so, for example, fintech is now hot, and it's a cool thing, and there's fintech VCs and fintech conferences, whatever. None of that existed when we were starting out, and it was kind of received wisdom that oh well, it's a highly regulated space, and it's don't you have to be a bank to do that? No, you don't. But again, the wisdom was that this is not a good space to start a company in, and then a bunch of companies emerged, there's Stripe and WePay and Square and all these various tech companies in the fintech space. And everyone was like, oh yeah, it's a good idea, but where were you when we were starting out? And so I think the first thing that happens is that people build successful companies, and then it becomes received wisdom. It's like, oh, people should build some companies here. So Firetech feels very much. Did you coin the term Firetech? Was that a term already?
I think there were some folks using it, but I think it's really become a thing over the last.
Okay, I'm going to say you coined it. This is Bill Clerico, inventor of Firetech as a term. But I think we should need to start saying Firetech enough, as a space.
You're also gracious not to mention that you guys definitely won in our friendly competition.
Oh, we're in slightly different spaces.
That's why you're running Stripe and I'm a wildfire venture capitalist. So. Let's talk about just sort of the journey to become a founder. So, why did you decide to become a founder?
Look, I was 19 when we started Stripe, so I didn't know any better. And in particular, I had started, so Stripe, for people who are not, for the 1/3 of the audience who's not familiar, we make it easy to accept payments online. And in particular, there's a huge amount of the economy happens on the internet these days, or is somewhat internet mediated. You think about Uber and Airbnb and all these kinds of services. But traditionally, managing payments, it was like Fred Flintstone stuff. You were dealing with these banks that had COBOL mainframes, and systems hadn't been updated in a long time, and you had to fax in your applications, and the underwriting department would take a review it, and just everything was operating at a very slow pace, and in no way set up well for the internet. So we said, what would a payment system and a payment service built from the ground up for internet companies look like? And that is how we got to Stripe. The way we got to the idea is that we had built an internet company before Stripe, and we were just so pained by the experience of, this was the hardest thing that we had run up against, and clearly the most lacking bit of infrastructure. And I think it's really notable, as I talk to a bunch of Firetech founders, how many of them come from having some, Max told the story of, his personal experience with stuff, and you probably wouldn't have gotten involved in this had you not been living in Boonville and gotten some, is that fair to say? And so many people have this kind of personal connection to it. And so I think that's really exciting. We should be trying to pull in more people who have this kind of personal connection with it.
Yeah. Our previous panel was about practitioners, and one of the things we were talking about was how to just increase the bandwidth of conversations between startups and people actually using the technology, the customer. And you guys are very infamous, in the early days. I think you would actually go and set up Stripe for customers and sort of look over their shoulder and all that. So can you talk about a little bit about how you did that? How did you talk to those first users? Why did you do that, and what was the value of that?
I will, but just when you mentioned the previous panel, I was reflecting on the fact that the rate at which startups are started in various spaces is not, I think, according to how many people need those particular products or services. I think it's according to how many people actually have exposure to the problems. And I'll give you an example of this. There are 1 million startups that get started out there for used textbook exchange. Horrible business, bad idea, we don't need another one. But the problem, of course, is who wants to start startups? It's college kids who are computer science grads or whatever. What problems do college students have? It's well, textbooks are awfully expensive. And so, they go and they start the 1,000th used textbook exchange or pizza delivery app or something like that. So we have way too many pizza delivery apps and used textbook exchanges being started. There's always a meme at Y Combinator, and way too few Firetech companies or a bunch of hard tech companies that people just don't. And so I think one interesting thing for us to think about as a community is how we pull more people into the space. Because again, I think people do not have enough exposure to the actual set of problems, and the fact that there are so many, I think you guys all see, there's just awash with opportunities. I mean, it's not just low-hanging fruit. You're bumping your head in the orchard. Ow, that really hurt. And so that wasn't the question you asked at all, but
no,
that was
resonates. I was a 23-year-old founder that started a company to split the dinner check.
Oh, that's another good one.
Yeah, everyone has the problem when you're 23. Good idea, terrible business.
But you guys pivoted, so
you
just
stole your idea, but
But sorry, to answer your actual question about staying close to customers. Look, I think it's very rare that the exact idea that hits success in the market is the one that you started with. Because when you started out, you don't know that much about this. I was 19 when I started Stripe. We knew very little about the industry that we now participate in, and so we had to learn it along the way. Okay, what does learning it along the way actually mean? The mistake is really when people get super hung up on their initial vision. It's no, it's the customer who is wrong. They just need to realize that this is what's required. And the really good founders, I think what they tend to do is be able to, Jeff Bezos' term for it is stubborn on the vision and very flexible on the details. And they are able to strike that balance. And so, for example, what we try to do at Stripe is just prevent anyone from ever getting too distant from the customers who actually use the products and have what we think are the most valid opinions on it. So, we start our week with our leadership team meeting, 8 o'clock Monday morning. The very first thing we have in the leadership team meeting is we have a user come join us on a call, and we just chat to them, and they tell us about their business, and they tell us about their use of Stripe and what they'd like to see fixed. And then we have on Fridays this kind of Friday fireside thing where we have the entire company, 7,000 employees. I would do this like kind of a casual fireside chat. It's like almost like a mini podcast that Patrick, my co-founder, and we host. And we bring a customer to that too, and they just pop in over Zoom, and we talk to them. But it's really clarifying, because you could have product people who are getting some highfalutin notions about, oh, we're going to actually invert the product with whatever. And then you talk to a customer, it's like, it's really hard to get someone on the phone, and I had this issue with whatever, and like the best thing that Stripe could do for me is like make it easier to get someone on the phone. It's like, aha, okay, that's very clarifying. And so I think, again, I see the founders who are really good at this stuff, especially in the early stages of a product. You have a good idea. It's not totally clear, will that fit with how the buyer actually buys? I think in Fire, you have an interesting question, kind of like in healthcare. Who is the customer for this? Are we selling to private individuals? Are we selling to corporates? Are we selling to the state? Which municipalities, which agencies are we selling to? And all that is the kind of stuff where you probably shouldn't have a super firm view on it up front, and it'll evolve as you develop the product.
Just rewinding way back, trying to land your first customer, which I think is a situation that many of the folks in the room find themselves in. Can you just talk about what was that process to go from this idea, how'd you find your first customer and, and all that?
So all startups start out with this credibility gap and a bootstrapping problem where they're like, who are you? And it's hard, right? It's hard to hire people because why on earth would someone go join this? We had a real, Irish hooligans, like a real credibility gap, but everyone has some amount. Maybe it wasn't as severe as ours. And they have a problem when it comes to hiring. They have the problem when it comes to customers because the obvious question that people ask both explicitly and kind of subconsciously, implicitly, is who else is using this? Is this the standard thing to do? No one got fired for buying IBM. No one got fired for buying IBM is at one end of the spectrum, and all the way at the other end of the spectrum is I'm going to be the first pilot customer for this thing, which is, everyone needs a first pilot customer. And so I think what startups are often doing in the first place is finding a way to jump across that credibility gap. And the biggest gap is from 0 to 1 customer, and then 1 to 2, 2 to 10, everything like that. But you're trying to establish credibility in the space. And there's no magic bullet, but there's a bunch of things that can work. Finding, a classic one is finding a person in the buyer who has always thought someone should do this, you know what I mean? Where this is like their idea, or kind of close to their idea. There's other things you can do, but I think that's the fundamental challenge. In our case, investors were really helpful because they could provide some measure of credibility, so we were trying to partner with banks early on in Stripe. And you can imagine, again, banks do not want to talk to two Irish horse thieves. And so instead, we went through some of the angel investors that we had gotten, and they were able to kind of facilitate some of our early bank partnerships. So that was pretty helpful for us.
Yeah, no, that makes a ton of sense. I think there's a lot of similarities between working through a big financial institution and working with public safety agencies in some ways. They both have to do a lot of things right at really big scale.
Neither are institutionally in the business of doing wild, wacky new things.
Exactly. And I think those partnerships, though, can be really helpful. Okay, so switching gears a little bit, you're an investor in Convective, an investor in Rain. What interested you in wildfire? What drew you into those businesses?
In both cases, it just clearly has to work. Hopefully these specific approaches, but the core idea has to work. There is too much, if you purely look at it in economic terms, and you don't have to look at it in economic terms, you could talk about the climate cost and the social cost and everything like that. But if you just looked at it in economic terms, there is a big economic problem with fire and wildfire that there is a strong incentive to solve. And so I think valuable companies will be built in this space because the TAM is there, the market is there for these companies.
Just as a data stat on that, there was a recent Senate report, $893 billion a year of economic impact in the U.S. alone from wildfire. So that is to your point.
So that is the TAM for wildfire companies. And I think you've done a very good job of becoming the leading wildfire investor in a short amount of time. And same with Rain. I mean, I spent a lot of time on the northern California coast over the last few years, and I like to go up there, especially during COVID when everyone was working remotely. and I think it was, what was the year where, we had the Beijing sky in San Francisco? Was that 2020 with the
2020,
particularly bad wildfires? And I remember, we were doing all the attack stuff, and there was, because I'm a pilot and a nerd on this stuff, I had Flight Radar 24 just, sitting open on my computer as I worked, and I kind of watched, everything come and go. And I was just watching this, I guess it would be Huey, and it would like go to the river, drop the bucket, go over, drop it on the fire, go to the river, grab water, drop it on the fire. And it's like, our current approach is we are using Vietnam-era airframes. Like this particular helicopter probably did serve in Vietnam. I mean, that's when they were all produced. And so we were taking a helicopter that is surplus from Vietnam and going and individually grabbing one bucket of water from the river and dropping it on the fire. This doesn't feel like the state of the art of what is possible. It feels like we could probably go further from here. And I thought the Rain Guys approach was just super cool.
Makes sense. We've fortunately made a little progress since then. The state of California just bought a bunch of Firehawks, and they're putting them into service. And so we are making progress, and it's really exciting to see what the future could look like with Rain. So just talking about you as an investor, when you make investments, what do you look for? What are sort of the characteristics that define your investment strategy?
Look, I mean, that makes it sound, your investment strategy, like much more organized and disciplined about.
Some of my LPs are here, so I have to really make it thoughtful, not just like, I like it.
Exactly. Yeah, it's definitely not that. I think what you're basically looking for is, like, one, the core idea has to hold together, and that sounds funny, but like sometimes it doesn't. And like you guys all remember Juicero. Like it's kind of funny to, it is a cliche maybe to make fun of Juicero, but like if you're investing in things like, wait, are people going to pay $15 in the force of a Tesla to compress the juice and everything? Just the idea has to work and be a very sensible one. And then I think the founder, they obviously have to know enough about the technical domain in which they are working to make the company successful. But I think that's challenging for two reasons. One, like the right founders can actually pick up a huge amount about the technical domain as they go. There's a certain curiosity that makes founders work in this space. And so, again, in our case, we knew next to nothing about the space when we started. We've now been working in the space for 14 years. Like, we now know a lot about the space, but it's everything that we learned along the job. And so you're trying to evaluate, do they have a good bedrock of, where do I think they are currently, and where do I think they will be after they learn at their learning rate about the space for whatever length of time. I think the second is that you basically have to be able to make the business work as a business, and the best founders have some amount of commercial instinct. I actually think we saw maybe a lot, like the bubble times of 2020 and 21 were absolutely crazy, but I think there was some suspension of economic reality that happens very harmful during the 21 bubble period, and you just go out, raise gobs of cash for everything. Those times are very definitively over, and I think in a healthy way, we're back much more to a business have to self-fund, they have to get crafty, and they have to be able to make the business work as a business from an early point. One of the things that we did that was useful at Stripe is we basically always ran the business on a break-even basis. And so even though we raised various rounds of venture funding, we were never reliant on that. We always could have run the business based on cash. And again, I think there's like a commercial instinct. In Ireland, we would use the term cute. I don't think that is used in the same way here, but kind of a savviness to how everything works, because the world will just want this business to not work. Your buyers will be like, that's really interesting. I think it'll take 3 years for us to get coverage. It's like, no, we'll be dead in 3 years. And so the business starts out default dead, and you have to, with your, by getting cute, by getting savvy, you have to will it into working. And the very best founders are able to get clever, get creative. Maybe they're, I think there's an underrated aspect of Elon as an entrepreneur. People often talk about the engineering smarts and the technical smarts, but if you look at those businesses and what was required to get them to scale, you have, SpaceX, where they, managed to actually get launch contracts from the US government. It's not easy to get launch contracts from the US government. They're not just handing those out to whoever shows up, and they kind of work their way up from the small Falcon 1, which was always kind of going to be subscale. They basically knew that it was too small, to Falcon 9, to Starship, and kind of evolving along the way, and now Starlink, monetizing separately. Same with Tesla, kind of working their way up through a sensible roadmap of cars. They would not have been able to start with the Model 3. I mean, it just would not have worked. And so they designed that roadmap to be able to, again, they got loans and everything like that. So I think there's a commercial savviness that was probably under-selected for during the 2021 period that will be required for the companies to survive.
Agreed. I think, just from my perspective, seeing that mindset shift, the sort of capital markets have shifted, but I'm not sure the founder mindset has entirely shifted yet. And so I think some of the founders that we see that I think are most excited about are really leaning into that and saying, okay, we're going to do more with less and cut costs and extend our runway.
Yeah, I think the bluntest version of it is the 21 mindset was, we're going to raise a seed based on our fabulous idea, and we're going to raise an A based on the deck being more well-designed and the idea being somewhat further along and some interest from customers, and then we're going to raise a giant B, and the seed will be 10 million, and the A will be 30 million, and the B will be 100 million. And I think all the companies thinking in that mode will be completely steamrolled by reality. And instead, it's much more about, okay, how can we bring cash in the door sooner? Who's actually willing to give us cash tomorrow? How can we get grants? How can we get the first buyer to actually commit much sooner than they would have? And I think that famine mindset is going to be selected for.
Famine mindset, I like that. Okay,
I guess in the US would be a depression mindset. In Ireland, we have the famine mindset.
Truth. So Charlie Munger passed away this week, and I know you've gotten to spend some time with him and interviewed him earlier this year. Passed away at 99 years old, and one of the probably most iconic investors of the last 100 years. So what made him that? Why do you think he's such a fantastic investor?
Yeah, I was really sad. He was 1 month away from turning 100, Charlie Munger, and obviously iconic investor, one half of the Berkshire Hathaway investing duo. And I think there's one or two interesting things. He actually had very simple investing frameworks that I think you're always trying to tell, is this just a folksy veneer that you use on TV or for college speeches, or is this what you actually think and how you actually make decisions? And as far as I can tell, that was actually how he was thinking about the world. And is this a high quality business? Do customers value it? Can it grow to be very large? And he there's this book of his, it's a collection of his speeches, Poor Charlie's Almanac, and in one of it he describes kind of the decision-making apparatus around investing in Coca-Cola that you can go read. I think if you just Google Charlie Munger Coca-Cola, you'll probably dig up the speech. And it gives a window into this very simple investing mindset that was actually pretty powerful. The other thing is that I think he was, again, there's this somewhat folksy Midwestern emphasis on integrity, doing the right thing, keeping it simple, that, again, after all the FTX and all the things of 2021, maybe it's pretty important to emphasize. But again, I think that Midwestern emphasis on all kind of the basic core values of what makes for a good person to do business with, and operating in a seamless web of highly deserved trust was one of his catchphrases. I think that was a very useful thing and a lesson he was always trying to tell to others. And then the last thing, perhaps related to the first, is another one of his quotes. I was seeing it after his passing, a lot of people referencing it, talking about maybe part of his success or a key to success being taking a simple idea and taking it very seriously. And I do think there is a lot there, and you can often use that to explain success and maybe use it as not just a post hoc, but an ex ante framework for success. As you look at Stripe, there is just going to be a lot of commerce happening on the internet, and if you take that really seriously, then it leads you to a lot of what we have done. And as I think about this room and this community, take a simple idea and take it very seriously. If you try to apply that Charlie Mungerism here, One that's obvious to me is technology, right? Again, we have between sensors, the fact that cameras are much cheaper now, the fact that things can be collected to the internet for data collection, robotics, autonomy. There's just, the technological advances have not flowed through to how we actually do fire management and fire suppression. And I think if you take that simple idea and take it very seriously, I mean, it's your whole venture fund, so I'm kind of fire-splaining to you at the moment, and I'll stop. But that seems very powerful. And then I think the other is the fact that, so I think one simple idea to take really seriously would be the technology gap. The gap between what is currently possible from a tech perspective and what we actually have deployed in the field today. The other simple idea I think you could take seriously is one of community and people and alignment. And what I mean by that is, this isn't like a red versus blue thing. This isn't a, AI safety debate where you have the accelerationists and the Yudkowsky doomers and everything like that. I think we all basically agree on everything when it comes to fire. And I know there's kind of debates about, how much good fire and, fuel management and everything like that. But I think basically everyone agrees with the broad things, which is damage to, property and life is bad, and we want to prevent that kind of fire. And then good fuel management is good. And people can have little debates about the, parameters in all that kind of stuff. But we all agree on that kind of stuff. And so what's interesting is we need better communication mechanisms, better ways for agencies and tech companies to work together. I mean, I think you're doing a great job of bringing people together here as a first step. But I think this idea that we need to better unlock the power of people working on this, bring in more people into the community, that there's a big element of it that's a people and a coordination problem. It is not an alignment problem. We all agree on where we want to go. I think that's a simple idea that we should take seriously.
Yeah, that makes good sense. One of the other things about, you talked about humility and sort of, Midwestern values and all that, and one of the surprising benefits of that approach is I think it also opens the door to learning, and I think there's a whole bunch of Charlie Munger quotes about learning, and I think that's such an important thing, and I think what lots of folks are here today. So you mentioned AI. Is ChatGPT going to solve wildfire for us? That was not a real question. So.
Okay.
Yeah.
I was trying to think, is there any angle, but it would take me longer to think of it.
So switching gears to climate change, Stripe, has made a really big commitment in Frontier to purchasing carbon credits from sort of unproven, cutting-edge technologies, and really, I'm not sure of the relative size, but I believe is one of the largest buyers of those types of credits. That's obviously not payment processing. So what led you into starting Frontier, and tell us a little about that program.
Okay, so the way we think about climate at Stripe is twofold. There is the emissions reduction side of things, and then there is the carbon removal side of things. The emissions reduction side of things, we thought that, honestly, we are not going to radically change the shape of anything that's going on. I mean, the progress there is actually pretty awesome. One of my favorite recent stats that I've learned, that I've been telling anyone who'll listen, is the amount of solar we will deploy this year, just the total solar capacity, is equivalent to all the nuclear that has ever been built in the entire world. So we're deploying 1 world nuclear of solar this year, and it'll be more next year. And so, solar is really working. Obviously, electric cars are finally starting to work at real scale. And so on the emissions reduction side, there's a lot that's happening, and just like, we think Stripe is a cool company. Stripe's really not going to affect the trajectory there. Carbon removal, however, well, one, why is carbon removal important? It's because you are always going to have some residual uses of kind of hydrocarbons and some residual sources of emissions, making cement, or aviation will take a long time to decarbonize and everything like that. And so you're going to need to pull some carbon out of the atmosphere. And of course, there's the backbook of all of the carbon that we have emitted to date, where we need to slurp some of that out. And as we started looking at that side of things, where it's like, okay, how do you actually remove carbon from the atmosphere? We looked at it and we found that it was all very science project-y. You know, you had these like crazy hair professors off in some university with like a wacky idea that might work, but like it's not a company, it's like a crazy professor's idea. And they might like to make it into a company, but again, we're talking about kind of the market structure questions when it comes to fire. Similarly, with carbon removal, there was no buyers. Like, who's buying carbon removal? And so we decided to just start buying carbon. And by the way, you can ask the question of like, why did Stripe do this? Just because we thought it was cool. Like, we thought it made sense and was a good idea and could actually impact the world. And so I think we kind of went and retroactively added some like very corporate sounding justification, but like clearly it's a thing someone should do, is the actual justification. And so anyway, with carbon removal, yeah, you had all these crazy science projects happening but no real companies. So we said, okay, what this market is missing is buyers for the novel technology. And so we said, we're just going to start buying carbon removal at any price, because we think there's a Moore's Law cost improvement curve possible. And so, you know, to situate you guys in the carbon removal math, carbon offsets currently cost, you know, between $3 and $10 a ton, depending on how serious you are about, you know, the offset actually, reduce, not having carbon be emitted. And there's a huge moral hazard problem with offsets where it's like very dodgy accounting and like, would the person actually have emitted the carbon if not, and everything like that. It's very hard to prove a counterfactual. And so we're not big believers in offsets, period. Carbon removal, on the other hand, some of these cool new projects are in the $1,000 a ton range. And so you can say, versus offsets, the bad news is we are 2 orders of magnitude off. The good news is we're only 2 orders of magnitude off. Like, that's not that much in the scheme of things if you look at kind of tech curves. And so it's a mere 2 orders of magnitude. So we started buying carbon removal, and then we put together a consortium both of Stripe's customers. So we have, you know, around 10,000 Stripe customers who put some of their revenue towards carbon removal, and then brought together a few big companies, you know, McKinsey and Shopify and I believe your alma mater, Chase, and various other companies. And so we put together an advanced market commitment, same as used in kind of vaccine development and stuff, of basically $1 billion at this stage. I think it's 900 and something million dollars. When we started, the total amount that had been spent lifetime on carbon removal was $30 million, and now we have this $900 million, 30 times the size advanced market commitment, saying we will buy the best carbon removal solutions at whatever the prevailing market price is. And so you have a market for your stuff. And so that has really led to some real companies being started in this space. It's quite exciting.
Yeah, I'm aware of at least one wildfire company, Kodama Systems, that I believe has a contract with you guys.
Oh, awesome.
On Frontier too. So it's awesome to kind of see that here in the room. Switching gears to just speed and innovation, and so why do you think we are so slow as a society at building stuff now? Relative to what felt so much faster in history and in the past? The Golden Gate Bridge, I don't know, was built in a couple years. I think if we tried to build that today, it would take a lot longer than that.
Yeah, it's very dangerous to allow me to start opining on such things. And clearly there is a declining capacity in the US and generally around the world with physical infrastructure. And you can pick your favorite example of the Empire State Building being lashed up in a year, or the Golden Gate Bridge similarly. And people correctly point out the tunnel of the tunnel in the Presidio next to the Golden Gate Bridge. The cost comparison and the time comparison, both of which are related, compared to the original construction. I thought there's like a certain poignancy here to Alameda Naval Air Station, where it used to be a thriving naval air station and a very impressive piece of physical infrastructure. And now there's kind of various craft breweries living in the husk of it. And I'm sure it's a great craft brewery, but there's something about the declining ability to do kind of hard physical things here. Look, I think there's an implicit policy choice that was made by the addition of all of the red tape that we added. I follow this stuff back in Ireland, where I'm from, and recently a solar farm was denied planning permission. Planning permission rules are very strict in Ireland. Was declined planning permission on ecological grounds, which I found very funny. You can't have the solar farm because of the ecological reasons, and they're worried about the the glare from the panels and the swallows nesting and everything like that. And you sometimes can have real, very valid ecological reasons to not do things, but I think we have ended up with a stasis and a huge amount of bureaucracy that acts as an inhibitor to progress. And I'm not sure it was a deliberate policy choice. I don't think any of you think you voted for the current state of affairs and were ever asked about it. I'm not sure anyone ever voted for it. I think there was just this kind of gradual emergent creep where we ended up really being afraid to make any changes to the physical infrastructure in our country. And then there's various kind of movements going on to push back on that. You know, there's these CEQA and NEPA reform movements that I think are a good idea, because I think if we had put it to a vote with full understanding of, you know, the effects of CEQA, the effects of NEPA when we were passing those things, I'm not sure we made the same decisions. And, you know, the good example as well is in San Francisco and the obviously kind of crazy housing situation and housing debate that you get going on there. But you have the, you know, the shade studies being perhaps the most absurd aspect of this. And again, there's a policy choice there, which is, you know, the beer garden, its shade being impinged upon means that therefore we will not, you know, build you know, a large amount of housing. It's like, wait a second, when did we make the decision that the beer garden's shade or, you know, and not getting sun is more important than housing availability? We never consciously made that decision, but we ended up with it.
You're investing in California Forever, which is building some new, very serious physical infrastructure, a new city in Solano County. That sounds pretty hard. You know, why are you doing that, and you know, what gave you conviction to do that?
Yeah, California Forever is a cool and very crazy story where they have the team there. They have a vision that building a new well-designed city would be a good idea. So they raised hundreds of millions of dollars, and they've bought 60,000 acres of land in Solano County, just north of here, to be able to build that. And that's actually not as random as maybe it sounds, where if you look at the Bay Area and look at places, a map of it, and look at places where they are suitable for the construction of a new city, and they are relatively underdeveloped at the moment, and they have good connectivity to the rest of the bay. As they were doing planning in the 40s and 50s and 60s, they were like, okay, this is where we should go build. You know, the next city, I think it was the Army Corps of Engineers, or as they were doing these studies, it was kind of the obvious logical site for a new city. And again, I think they have the belief, kind of, you know, one of the things that I was hearing in the talks before this is this idea, I think, embedded in this room, which is we've really learned a lot about fire management since, you know, the 50s and 60s and 70s, and when a lot of the current doctrine was developed, and we know a lot more, and we would take some of the lessons from what we did previously, but we'd also update them a lot. And again, I think, you know, Jan, who's the CEO there, his idea is just we know a lot more about what building, you know, pleasant, green, walkable, good to live in, affordable cities. We know a lot more about that than we did previously and during, you know, the suburbs boom of the 60s. And so you can probably build a really nice city if you start now. And it's not all that, you know, sidewalk labs, techno sensors and everything. Like, you know, they don't care about that. It's how should it be laid out? You know, do you want row houses? Do you want, you know, people on their own plots of land? You know, what should the transit connectivity be? It's all the basics of kind of what it means to live in the city.
So last question before we sort of head off to lunch. I wanted to ask you about community. You know, we're building a community here. You've built a community at Stripe. We met through the Y Combinator and sort of Palo Alto tech founder community. In your mind, what makes a great community?
I'm very lucky because I came to in Silicon Valley age 19 and was able to very quickly make connections with people, get help from people, and kind of benefit from the community that's here. And I think one of the most striking aspects for me of Silicon Valley is there are other business communities where there is not this pay-it-forward, collaborative approach. New York finance, probably a good idea, where they're all at each other's throats and not telling each other anything, and enforcing these very stern non-competes and everything like that. Whereas really the vibe in Silicon Valley, and what I think makes a huge amount of it tick, is that people are so willing to just meet for a coffee, share their advice, even when there's no near-term kind of benefit to them. And honestly, I think part of the power of Silicon Valley is companies don't get to retain all their intellectual property. The intellectual property is in the people, and they meet up for beers, and they're like, oh, how are you guys doing this? How are you? It's like, aren't those the company's secrets? But it leads to a much better productivity of Silicon Valley overall, even if there's maybe slightly less lock-in of the people and the expertise. And so I think, in a way, everyone here is on Team Silicon Valley, in addition to being kind of on the team of their individual company. I think that's a super powerful aspect of how Silicon Valley works, and I think a good norm probably for the Firetech community would be that ultimately everyone has their particular approach, but we're kind of just all trying to do the same thing at the end of the day with, different ownership structures and different, web domains and everything like that, and different product approaches, but we're kind of all trying to do the same thing. And so, again, the Munger quote, maybe a good note to end on today, would be that operating in a seamless web of deserved trust is one of the most satisfying and productive ways in which to operate.
I think on that, help me thank John Collison.